On today's show, how to figure out if the home you live in is a performing asset, but it's probably not.
That's right. We're going to put your house to the test. We're going to give you 3 questions to ask yourself to determine if your house is actually a performing asset.
So when you're done with this video, you will know the answer, and you can look like the smart one at the cocktail party. Hey everyone, I'm Clayton Morris.
I'm Natalie Morris.
We're longtime real estate investors, and in 2017, we left our day jobs because of the passive income from investing in real estate. Now, our goal is to help you become financially free and create financial intelligence in your family. So thank you so much for subscribing to our channel. So on today's show, we are going to talk about the house you live in. Now, most of the time, we will like to walk around and say, the house you live in is absolutely not a performing asset, to which we get pitchforks thrown at us, tomatoes thrown at us.
Nasty tweets.
Have you ever gotten a pineapple thrown at you? That would hurt.
No, I have not.
But because
Yet.
The reason people get so defensive around this topic is because we've been lied to for generations, right? It's the American dream.
Right.
What's the American dream? Get a good job, go to college, right? Go to college, get a good job, contribute to a 401k.
Have 5 million Instagram followers.
Right, and buy a house and live in that house.
Right.
And that's how you build wealth. Well, guess what? None of those things are true. And buying the house you live in as the pillar of your wealth accumulation is absolutely idiotic. Why?
Well, it's just a very expensive way to live, because if we sort of think about, you go to work, you get a paycheck, and then you think, well, my paycheck is sufficient to pay this mortgage, meaning that you've already thought, okay, this paycheck is going to allow me to live in this certain house. I can afford this much mortgage. Therefore, that's how I'm going to live. Well, if you dissect the mortgage, it is mostly made up of payments to the bank, not even paying down what you own on the house, because the bank has taken a big risk and given you this big amount of money to buy a house, right?
Right.
And so mortgages are expensive. Now, we're fine with debt. We're fine with the banks making money. They stuck themselves out on a limb for you.
Right.
But we like debt that's attached to performing assets. So we want to ask yourself, right now, I'll ask you.
Okay, ask me.
Do you know what an asset is? Now, answer as if you haven't gone through this process. What is an asset?
I would think that something that, if I haven't gone through this process, I would probably say something that's worth money.
Right. Exactly.
That's how most people would respond, right? It's worth money. I've got an asset. My house is worth money. And most people's response to the is your house an asset question say, well, I bought it for, $200 and now it's worth $220. It's an asset.
Right. They think it's just anything that you own is an asset, right? But that's not how an accountant or a CPA would define an asset. They define an asset as something that produces cash flow.
Well, I would say a smart CPA, like our accounting firm that we work with at Wealthability, our friends at Tom Wheelwright and Company. There's different accountants. Let's be honest. There's different CPAs, and smart real estate accountants understand that a true asset puts cash every month in your pocket in cash flow.
Right. So if you say to a CPA, like, I own a business, here's our assets and here's our liabilities, and they look at your assets and they say, well, this thing doesn't cash flow. So then by that definition, is your house an asset? Most people are going to have to say no, right? Unless they run a hair salon out of the basement, or they run a child care in the living room, or they rent out more, a room or two on Airbnb, right? If you don't use this place to make money, it absolutely is not an asset.
Right. It's not putting money in your pocket every month. For most people, the biggest expense that they spend their W-2 paycheck on is their mortgage every month. And when you bought that $200,000 house, by the time you paid it off, you're probably going to spend about $400,000 or more to the bank in interest payments. So that is not putting money in your pocket by any stretch of the imagination.
So then, what would a smart accountant say to you if you have a liability, meaning the mortgage, the debt, attached to an asset that does not cash flow?
That is a liability.
Yes, it is. So I'm asking you, what do you do with it then?
Oh.
You've got it. You've got two options
Right.
then. A CPA would tell you, this smart CPA would say either pay off the debt or sell the liability.
Right.
You have two choices, right? So most of you are going to say, but I love my house. I want to live here. I want to live in this neighborhood. My kids go to school here. I love my neighbor, right? Most of you don't want to leave your house. There will be a select few who will say, yeah, forget this. I'm moving to an apartment and I'm going to use my extra cash and invest. That's great. That's awesome, right?
Or rent a house in the neighborhood that you want in the same
Right.
school district you want, which many, many smart investors do. I know a lot of smart investors who own hundreds of rental properties, but the home they live in, they do not own. They rent the home they live in. Tax reasons, they don't want to have to deal with the upkeep. And
Right.
it becomes the landlord's responsibility.
Yeah, you could sell the house and stay there, sell it to an investor and then pay them rent, right? There's all kinds of options. You could sell the liability, or sell the asset rather.
Right.
Sell the asset. I'm going to put it in quotes.
But you could also pay down that asset, that
Right.
liability, and turn it into an asset.
Exactly right. And so that's where our book comes in, How to Pay Off Your Mortgage in 5 Years or Less. We teach you all kinds of strategies to just lessen the weight of the liability, right? That's another great option if you want to stay in your house.
Right. And there are, as you mentioned, other ways to kind of turn your home into a performing asset. Maybe you bought a duplex, and you live in one side of the duplex while you're renting out the other side, and that's paying for your mortgage.
Yeah, that's awesome.
Right? You're building equity with the tenants next door. You're building up equity, and that's sort of called house hacking is the terminology. So that's one way to do it. But another thing to look at, though, is paying down this mortgage as quickly as possible using the equity in the home. So let's say you do have some equity in your home. Wouldn't it make sense, and we teach you how to do this in our book, is to use a home equity line of credit to actually pay down your mortgage further, and that makes your home more of an asset as you get down to $0.
Exactly. So then what you're doing is taking your paycheck, right? What you think you've got every month, and you're freeing it up at the end of this process. Then you have no mortgage, right? And now you can use your cash to invest in actually buying performing assets, right? We obviously on this show love rental real estate as a performing asset, but you got to find your flavor of performing asset, whatever it is. For some people, they're very risk averse and they like the stock market, although I would make the point the stock market is very risky. For some people, they want to, whatever. What are some other performing assets?
Yeah, gold. I mean, you could certainly buy gold. You could buy art if you wanted to. You could buy a business, right, which is a performing asset. We like rental real estate because, unlike the stock market, it can never go down to $0 in value. So the houses that we buy and do are in the $50,000, $60,000, $70,000 range. That's what we do at our company. But we buy those because we know that can never go down to $0 in value. It's going to produce a certain amount of cash flow each month, $700, $800, $900 a month in cash flow. Consistently, we get the tax benefits with depreciation, cost segregation, and all of those high-level ninja tricks that we get to use our purchases of real estate for. But the best part is, if you use that home you live in as an asset, and you go and get a home equity line of credit on it, and let's say they give you $50,000 to work with, you could use that $50,000. You could pay a chunk of that down on your principal balance, and you could buy a performing rental real estate asset with the remaining balance.
Exactly.
I mean, it's a brilliant strategy. Or you could also use that equity in your home to pay down some higher income credit cards or higher interest credit cards and work to limit the liabilities in your life.
Right. Okay. So what are the 3 test bed questions then? You have a mortgage and you thought that it was an awesome thing to live by your mortgage, and now we're challenging you. So the 3 questions: what is an asset?
Okay.
Right. And then by that definition only, is your home an asset?
So be honest with yourself. Is your home an asset?
Right. You cannot count appreciation. We're talking about cash flow. Right? Appreciation is not a cash flow.
And you can't eat equity. You cannot eat equity.
Right.
So yes, that's great that you've got equity in your home. Wonderful. Is it producing cash flow for you every month in your bank account? Are you making $700, $800 a month in cash flow from this asset?
Okay, it has to cash flow, right? Appreciation is a transactional one-time bada bing, bada boom. You're saying, someday I'll sell this house and have more money. Okay, That's not cash flow. That's one sale. Okay.
Right.
So we're talking about, is it actually an asset? And then you're going to have to ask yourself, if it's not, what is my plan? Because now that you know, you can't do nothing because we've given you this power. You can't just keep paying the mortgage with no plan. Now you have to come up with a plan. We've challenged you.
Right.
Right.
What are you going to do with this liability?
Two options. What are the options again?
Sell it.
Sell it
Okay.
or pay down the liability.
Right. So what are you going to do?
Those are your marching orders.
Yeah.
You know.
So we want to hear from you. We want to know. Let us know in the description and comments threads. What are your plans? Are you going to attack this thing? How are you going to do it? Are you going to use a home equity line of credit? Are you going to borrow from your 401k, which we talked about in our episode? You got to check out our entire video that we did on how to pay off your mortgage in 5 years. Ding, ding, ding. Check it out. Check it out. Because we break down some more of these strategies. How are you going to do it? How are you going to attack this beast? Are you going to rent out part of your property to somebody else and start getting it cash flowing? Let us know. We can't wait to hear from you.
Yes, indeed.
And also check out our brand new book. It's out now and available. Please check it out on Amazon. And finally, we should mention, please download our free freedom cheat sheet. It'll help you figure out what number you need to achieve in order to reach financial freedom. It's totally free. It's 3 pages. You can download it right here and pick it up and walk through it with a spouse, a partner, and figure out your financial freedom number. Yeah.
A parent.
A friend.
A dog.
That's going to do it for this episode. We want you to go out there, take action, become a real estate investor because we believe, right? We believe.
We do believe. What do we believe?
We believe that's the number one way to build wealth.
Oh, yes, that we do believe.
We'll see you next time, everyone.